Every decision that Amazon makes is data-driven, from its latest acquisitions to operating its own air freight company, to buying its own freight planes, to whether to adopt a next day or 2-day delivery strategy. Because every decision is data-driven, Amazon is able to, on most occasions, join the competition and beat them at their own game. When it comes to air freight, Amazon operates a hub and spoke strategy like FedEx and UPS, but does it more efficiently because of it being a data-driven company. Amazon Air started in 2015 with the lease of 20 aircraft, and it's now about 100 aircraft. For the freight business, like Amazon Web Services, it is able to monetize its excess capacity by helping businesses to ship their products at a far more competitive price than what FedEx or UPS can offer. Amazon Web Services is the most profitable of all Amazon businesses. And while analysts mainly claim that it is AWS that is keeping the business solvent, it might not be the entire case, as the way Amazon reports its revenue does not give a full insight into the retail size of the business. AWS contributes 60% to the overall profitability of Amazon and is still growing. Amazon is quietly building its automation and robotics prowess. With the purchase of Kiva Systems, the warehouse robotics company, the development of drone delivery systems, and iRobots, the home cleaning robots. Its most recent purchase was Clostermans, which is a specialist in mechatronics based in Belgium. This purchase is strategically focused on strengthening its robotics and automation division. It is quite surprising that the Clostermans acquisition follows right on the back of the iRobot acquisition. Amazon also has an 18% stake in Rivian, the utility EV company. The company is responsible for the delivery of 100,000 delivery vans with the option to exercise rights to have more electric vans built if needed. Amazon is also venturing into primary healthcare with the recent purchase of One Medical. One Medical's mission is to make quality healthcare more affordable and accessible through a combination of in-person, digital, and virtual care services. Amazon has been trying to make an impact in making primary healthcare more affordable. Neil Lindsay, Senior Vice President of Amazon Health Services, said, "We think healthcare is high on the list of experiences that need reinvention. Booking an appointment, waiting weeks or even months to be seen, taking time off work, driving to the clinic, finding a parking spot, waiting in the waiting room, then the exam room, for what is too often a rushed few minutes with a doctor, then making another trip to a pharmacy. We see lots of opportunity to improve the quality of the experience and give people back valuable time in their days." My impression is that this acquisition would allow Amazon inroads into making primary health care extremely efficient and affordable. This acquisition strategically pushes Amazon towards this goal. In May of 2021, Amazon acquired Mgm Studios. The classic Hollywood studio will complement Prime Video and Amazon Studios. It would also work in delivering a diverse offering of entertainment choices to customers. With ownership of the James Bond and the RoboCop franchises, Amazon could strengthen its Prime brand. Finally, you have the core business, which is Amazon Retail, which delivers everything under the sun. Amazon is continuously investing in its core business to improve the customer experience and is using deep learning AI to understand its customer needs. Even if you dislike Amazon and their business practices, I'm certain that with its reach, everyone in the world would directly or indirectly be paying for the growth of this company. Remember, every acquisition that Amazon undertakes is a data-driven decision and not based on it is a good to have feeling. Then there is the advertising business, which has between 20 and 30% operating margins, with probably the most competitive ROI and CPM, which is the ad spend per thousand impressions in the online business. The CPM for Amazon is between $2 and $3, whereas Walmart's CPM is about $20. Amazon is a company with a high return on capital employed. It is a predictable, great business that is currently priced right and does not require any margin of safety to purchase its stock. The best margin of safety is buying a great company, and Amazon fits that description as it continues to redeploy capital into its business. It is a compounding machine that continues to expand through acquisitions, innovations, and advertising. It is currently the fastest growing online advertising business, beating Google and Facebook, with revenues totaling $66 billion for the first half of 2022. Its revenue from third-party sellers exceeded $100 billion for 2021, while online revenue exceeded $220 billion. The revenue from AWS is projected to be about $20 billion per quarter, or in the neighborhood of $80 to $100 billion per year. So you can see the reason why this company is great at what it does, and I have no doubt in my mind that it will continue to become stronger as it enters new competitive areas and continues to beat the competition at their own game. I might be wrong. If you think I am, why not leave a comment below? And let's look at how this portfolio performed this week. The portfolio is down minus 6.95 for the month of September, and is down minus 31.34% for the whole of 2022. The risk score is still consistent at 7. The portfolio only has 2 stocks that are positive, and that is Apple and Rivian, with Genius Brands being the largest losing position percentage-wise. This is an overview of the portfolio. Looking at the overall portfolio performance, the size of the portfolio allocated remains the same. The loss has increased to 7,600. The equity has reduced from loss on the portfolio has increased to 21%, and the portfolio has underperformed the S&P 500 by minus 4.75%, and the portfolio performance from the previous week is minus $2,161. That is the further loss over the previous week. Looking at the weekly portfolio performance graph, this is the second week on the trot that this portfolio has made a loss. The portfolio underperformed the S&P 500 by 4.75%. It outperformed the S&P 500 by 1.1% over the last month, and year to date it's outperformed the S&P 500 by 23.07%. I want to say thank you to everybody who has supported this channel so far. To make this project successful, I need your support. So if you can support me by hitting the subscribe button and also smashing on the like button, I would really appreciate it. So take care and thank you for your support, and I'll see you in the next video. Bye.